cut interest rates. I didn't think we would get one till next cut, but the market was predicting that we would get one today. I just kind of figured they wouldn't. Specifically because I thought that they would value the Canadian dollar more than they valued the local real estate prices. I was wrong. Real estate's too important to Canada's GDP, and the real estate market here in Ontario specifically is the worst I've seen it in a decade and a half. Major life support. And today, TIFF was like, it brought back the real estate market. This is going to heat things up in a big way. I'm excited to see how this plays out. I'm really excited to see, well, for one, my mortgages. Today's cut of 0.25% translates to, I don't know, probably like $500 to $600 a month savings across my mortgages that are variable. So I'm saving like $6,000 a year off this one decision. And then they're going to cut again, and probably once they start, they just keep going. They're going to cut again in July. They're going to cut again in the fall. We'll probably have a fourth cut sometime into 2025, into the spring. It's going to be a roaring 2025. It's interesting though, when you look at the data, mortgage defaults are their highest. They peak just after the first few cuts. And that's typically because the capitulation point for most investors or mortgage delinquent folks typically takes 6 months to a year for you to fall behind. So people who are going to go bust, even though they lower rates, they still go bust anyway. And so that's interesting, sort of bit of data. If you're looking at the data, historically speaking, mortgage default rates actually skyrocket after the first couple of cuts. So we should see a ton of new inventory popping on the market. As I've been telling you guys, this is the moment we've been waiting for. As they aggressive, the second cut is when we start buying. The second cut is when we get aggressive on buying real estate, because once you have consecutive cuts, we know there's a trend down, we're good. The first cut could be a mistake, they could correct, they could go higher for longer. We don't know how that plays out, right? But once we have 2 in a row consecutive, when we see inflation's staying in the 2s, really good news for the real estate market. And so I think that's extremely bullish. It starts making deals make sense that didn't make sense before. And there was so much unknown about how long we'd be higher for longer, because in 2021, they said rates would be down, in 2023 guaranteed. And in 2022, they said the same thing. And in 2023, they said the same thing. And then in early 2024, they said the same thing and didn't. And now they finally did. It's coming from a place of weakness, though, unfortunately. We aren't, in Canada, navigating through the rock and the hard place. We're in the fucking hard place. Our GDP per capita is at 30-year recessionary levels, like the lowest we've seen. Our real estate market is on life support. Real estate's down like 30% from the peak of 2022. Imagine buying a property in 2022, and 2 years later, you've lost 25%. Meaning you put 20% down, your entire down payment's gone, and you're still underwater. You couldn't even sell it today because the transaction costs wouldn't even net enough to pay off your mortgage if you put 20% down, when 80% loan to value. That's the reality of the Ontario real estate market for most folks right now. And on top of that, the majority of mortgages are renewing right now. There's still a third left that are fixed, and those folks are really scared, and they're putting a lot of pressure on the government to lower rates. So there is a push for that. Unfortunately, the US isn't in the same. So when I'm talking about the US, Federal Reserve versus the Bank of Canada, totally different conversation, because the US economy is resilient and strong in different ways. So most of the US real estate market is strong and robust because they're on mostly 30-year fixed rate mortgages. And so they didn't feel this to the same extent that we did in Canada, where we have 1 to 5 year fixed rate mortgages, and over half of Canadians are on variable rate products. So something like 3/4 of Canadians have already renewed into this new 7% environment. And so their mortgage payments that were $2,000 are now $4,000. So in Canada, we're completely outright fucked. Like, people are choosing between food and paying their mortgage. They're choosing between there's no extras. It's like necessities, pick up a second job. It's real hardship here in Ontario and in Canada, where housing prices were ballooned way higher than they probably should have gone, and then rates, tripled. And so it was just a perfect storm of pain. And Canada is, relenting to their, they've been crying out for a long time, Canadians, and they're hearing them. And, it's good that we've seen our economy is in the shitter, and that means rates can fall. So as a real estate investor, super excited about that. Let's talk about other things that happened today. NVIDIA, over $1,230 a share now. We're talking about a $3 trillion market cap. It passed Apple. It's now one of the most valuable companies in the entire world. Again, based on revenue, makes no sense. I guess they're growing exponentially, and people have paid for that growth now in the share price. I like NVIDIA. I think it's a great company. I've always liked NVIDIA as a gaming card producer. I like that they're doing the AI space. They're doing more than I thought they would do, but they're taking the NASDAQ with them. NASDAQ crushed. New all-time high close today. We were up 3% from yesterday, up 4% since Friday. Today was an over 2% up day just in the entire index. Now, obviously, NVIDIA up 5.5% on no news. Just up 5.5% for no reason. That's 160 billion market cap added just on hype. Like, no real reason to be up. And so it's just crazy to me that we've been able to maneuver this in ways that I didn't think we could. And I don't think that we're fully out of the water yet. I think that, I was wrong to have shorted tech. I underestimated how much power people would give to AI. But you know what? There's potentially still another 5% of upside. I would say there's a huge risk of downside. So if you're gonna go long right now, please hedge against downside. Like, you might make 5% buying the index at all-time. Like, we're at all-time high records being set right now. It was the strongest. The month of May was the strongest in over 2 decades. We haven't had a May this strong upward bullish in over 2 decades. And I've been short. It's funny, I've been short like one of the strongest bull runs in history for the last 20 months I've been short. So that's been like a weird observation. It's like when you expect the world to end and the inversion yield curve and all the data saying it's going to be a recession, you don't get one because everyone's expecting it. It's when everyone, and we're getting close to that, where everyone's given up on expecting a recession. Like, I think everyone's like, okay, the bull case scenario is playing out, everything's good. That's when shit actually doesn't go good. So just be careful. We are at all-time highs, could go higher. We could see, another 10% potentially, 5-10% upward momentum before an ultimate crash. I mean, in the dot-com bubble, I think things went 140% up before ultimately crashing, in half. And it feels a lot like the dot-com bubble now. There is better, rationale and income behind it, but I think that once these data centers are built and we've got the infrastructure in place and there's some new competitors that come in and compress margins, we'll see the PE ratios shrink on companies like, NVIDIA is like over a 70 PE ratio, even with their crazy growth. Like, if they didn't have their growth, they're like a 300 PE ratio, but they've grown so much that they've grown into their earnings. But what's weird is that usually as companies stabilize and they get to those higher levels, usually what happens is their PE ratio compresses. And we should expect, like, when we get back to a 3% interest rate environment, we should be happy with like a 15, 20 PE ratio, I'd say, for most tech. And so like 70 is really high, like triple what it should be. And so just kind of weird in general that, an observation I'm making that we're at all-time highs here and they're potentially could go higher. Full disclosure, I'm still short. I'm waiting for a pullback month if we had one more down day in April, I was going to close out my shorts. I closed out most of them. I had like 2/3 of them closed. And I'm just waiting for a big pullback for myself. But that's not advice. You probably shouldn't do that. For me, it's like my options account is sort of like a hedge. Like, I have real estate and I have other investments that like they all do well as the market does well. I have crypto and things that all do well as the market does well. I wanted my options account to be a hedge. So if the world went to shit and my real estate all got trashed and my other investments all didn't do well, then I thought this options account would blow up. And what ended up happening was my hedge account just got destroyed and everything was fine. Like, the world didn't blow up. Real estate went to shit. Stocks went to all-time highs. It made no businesses, 45% of businesses in Canada couldn't make their rent last month. 45%, almost half of small businesses couldn't make their rent last month. I was looking at the economic data in Canada and extrapolating to the US, not thinking about AI and the effects of that on tech. And so I think that was my mistake, was like, if I just shorted the Toronto Stock Exchange, if I had shorted like, bank stocks, your telcos, your Enbridge utility delivery type plays that are strong in the TSX, would have actually made a lot of money shorting. The thesis was right. The execution was totally wrong. I should have picked like value shit that doesn't do well when rates go high. I thought that tech valuations would compress because there's such it's hard to raise capital at 7, 8, 9, 10% when you get like risk-free returns of 7 to 8%. Why would someone want to throw their money at a growth stock with a 70 PE ratio, which means that you have to hold the stock for 70 years to get break even based on earnings? So it's like, most of the time, usually in these types of environments, you would see tech get hit harder, but I was completely wrong on that. And I'm admitting it, but you know what? You don't know. You don't know what happens in the world. If anyone tells you that they actually know what's going on, they're lying to you. There's a handful, less than a handful, almost no investors that over a 25-year period have beat the index trading. Almost no one. Like, the best traders you see on, like, they're all on Instagram and Facebook selling courses and shit. The ones selling courses you need to be the most afraid of. Because, like, I've talked to dozens, hundreds probably of students of these programs, and they all fucking after 2, 3, 4, 5 years, they blow up their accounts and shit happens. Like, almost everyone blows up their accounts doing this kind of stuff. So just be careful, guys. My advice is this. Stock options should be something that you do with money that you can afford to lose. It's not something that, I put my whole life savings into. I would take 10, 20% of, what you can afford to throw in your stock account towards sort of degenerate type plays that can play off really well with options. You can do really well, if the market had gone down, my thesis was correct, which it was in Canada, if I had just executed properly and I guess shorted the Canadian economy instead of tech, even if I had chose the Dow last year, I would have, with theta decay is 1% a month, right? So I would have still been green on that trade. So the problem was I chose, high growth tech shit and stuff like CVNA. Carvana is a trash company that, often cooks their books. Each quarter they find a new thing to a one-time realization of options, a one-time recharacterization of a loan. They never actually make any money from selling any cars. They never actually once. They have 11, 12 billion in debt, I think it is, at 12% average cost of debt or 10% cost of debt. They literally can't even make a profit to pay the interest on the debt that they owe. But companies like that have tripled in value in the last couple of years, which to me is it made sense when money was being printed and it was free. Now it's money supply is actually kind of contracting, and I mean, rates are potentially coming down now, but they haven't come down yet. And so there's a whole bunch of lack of, I don't want to say lack of liquidity, but there shouldn't be as much liquidity as there is in the market. It's an interesting, typically when you contract the money supply like they're doing and you keep rates high, it's usually hard to raise capital. And yet there's just so much of it. And I guess the only logical conclusion would be people just don't value their dollars anymore. And they're thinking fuck it, YOLO to the wind and throw it in growth and meme stocks because, I can't even afford to eat. So take the last $500 I've got and fucking YOLO it. Hope I get a 10x bagger and forget value, forget fundamentals, forget anything, just YOLO and gamble. And it's interesting, there's some good literature on this, but most societies as they fail, gambling rates go way up. People start just gambling like crazy. So it's interesting. I think, from that perspective, maybe inflation is actually out of control. And I mean, we have had 25% inflation in 4 years. So if your rent was 1,000, now it's 1,300. If it was 2,000, it's 2,500. Your food, if you went and spent $200 at the grocery store, now you'll spend, $260 for the same amount of food, minimum. In some cases it's $300, $400 depending on what item you're buying. So we have a mad inflation. And so I guess the logical thing for the consumer, or the retail investor, is they have no education. They don't understand how to read financial statements or balance sheets, but they see there's some hype and there's some potential and some excitement, and they just get the fear of missing out and they jump in, right? And so they invest in GameStop and trash companies that, although as much as I want to shit on GameStop did do a good job with, they saw they had all these degenerate gamblers bag holding at the top, and we're gonna sell shares to you guys, and they actually capitalized and raised billions in capital from the bag holding degenerate folks who are holding shares at the top dollar. When they issued shares, they collected cash. And so GameStop has a lot of cash actually right now. They would otherwise be bankrupt if not for the degenerate idiots who overpaid for the shares that were issued. So it's kind of interesting, almost a self-fulfilling prophecy in that the people who say there's deep fucking value on a garbage company that was on its way to bankruptcy, declining in every metric in every way. But this new infusion of cash and interest actually might have saved the company. So it's kind of a crazy paradigm where imagine if you had a shit property that had the horriblest tenants, didn't pay rent, and I don't know, some crazy environmental shit was happening to your property. All these negative things were happening. And then the market was this property's worth $10 million. And you could go get appraisals really high and raise capital and then use that capital to then fix the property that was going to be condemned, fix it back up and actually make the property not bad. So that's kind of what happened with GameStop. It's shit, to make the analogy, shit company that might be actually saved through the excitement. And interestingly, the shorts technically, I guess, created the frenzy that saved the company, which is wild. They actually got to thank the shorts for saving the garbage companies. And I don't know what to make of NVIDIA. I think it's trading at about twice what it should be. It was worth $100 a share. It's now worth probably $600 a share. It's grown like mad. It's a great growth story, but it's just overhyped. And it feels a lot like Tesla. Tesla at its peak in 2021, you guys remember there was mania around Tesla. It was all the Tesla bros. Now it's the NVIDIA bros. And, Tesla fell 55% now. When I was checking it recently, a few weeks ago, it was up, it was down 55% from its all-time high. So Tesla lost half its value. NVIDIA is the same thing. I love Tesla. It's a great story. It was just People were paying way too much per share. They just didn't look at the intrinsic value. They were just caught up in the hype. NVIDIA feels the same way. It has big shoes to fill. For it to actually reach, it could happen. It could be worth $1,200 a share if they can meet these insane growth metrics, which they might be able to do. It's hard to say. They might be able to do it for a year or two, but at what point do competitors come in and kind of eat the moat that they have? When they can, or maybe people start in-housing as well. Like obviously Meta's looking at in-housing their own chips. Everyone's going to start in-housing their own stuff. So, Chung, sorry to hear that about regretting not selling Tesla. Yeah, I mean, it's just a lot like not selling GameStop at $70 a share. It's a lot like not selling NVIDIA at $1,250 to $1,500 a share. Those people are going to regret it, just like the people who didn't sell Tesla at the top are going to regret it. Again, great company, love Tesla. Just it got hyped up above what it's worth. And people think these growth stories can happen. And you know what? Life fucking happens. We go through financial crisis. We go through high interest rates, high inflation, war. Shit's going to happen. Geopolitical risk, whatever. Something will happen that will derail the growth plan and they won't meet their metrics. It's just like when you have insane, like if you expect someone to get 100% on a test, every single test, and they get like 95, 95, 95, you're like, they're going to keep getting 100 forever. I'm going to price that in now. And then one test, they get like 85, which is still an amazing mark, but you already priced in that they would get 100 on that test. That's what's going to happen in NVIDIA. One of the times you're going to get 85 in their test, the stock's in a fucking tank because they're not going to reach those massive, unrealistic expectations that the market is putting on them. And so it's a reality of human psychology. Like, having taken psychology in university, I learned in human organizational psychology that humans are, and this might be like a bit nihilist or like a bit, like, how do I say this? I'm just going to say it bluntly. People are fucking dumb. Half the population on the bell curve has a double-digit IQ, meaning 99 or less. Meaning, and like not only that, but like a third of graduate high school students can't even speak a fluent language right now. They can't even, if their only language is English, they can't even speak it properly. They're using emojis to speak. Like our society is deteriorating to the point where people are retarded. And the movie Idiocracy. It's a good movie from like 2006. Go watch it. It basically talks about the fall of America and like people are all stupid in the future. That's where we're going, it feels like, in a lot of ways. And so, I don't know where I'm going with this, but like I expect a lot less now of people. When you look at like the way people perform, people are mostly sheep. They mostly just do as the follower, the main person they're following, they just emulate and they do exactly what they do. And so they follow the herd, and oftentimes they jump off the bridge with the first person that jumped off the bridge. So it just is what it is. Human nature. We suck at identifying patterns. We suck at following rules. We suck at delaying gratification. All things that are necessary for a society to advance. And so in a lot of ways, humanity is kind of, you can't expect a lot out of humans. And I guess sometimes I expect too much of them, and that's irrational to do, given the evidence in our faces. All right. What do you think we will see? So I did post today, David, to answer your question. When do you think we'll see threes in the mortgages? We're seeing promotions right now in the high fours. In Canada, you can get a 4.99 5-year fixed rate mortgage right now, 3-year fixed rate mortgage right now. The market is pricing in, and I think we're 3 cuts. So the question is, when do we get into threes? I think we'll see a promotion next spring in the threes. We'll start seeing 3.99 5-year fixed, 3.99 3-year, 2-year fixed. Or close to that. So I think we're 3 cuts away from that. We may get a cut this summer. We'll probably get another cut in the fall. We might get another cut at the start of the next year. So by springtime at the latest, I think we'll start seeing a 3 handle on Canadian mortgages again. That's my prediction. In the US, we're not going to see 3s for a long time. I think the US has got if they can collapse their stock market or have a pullback on their stock market and put the nail in the coffin on inflation, then they can bring rates down. I think it's a ways off for the US still yet. I think maybe towards the end of this year. Again, there's so many variables at play, right? Like if we have any geopolitical challenges that drive oil back up again, then there could even be a situation where Canada has to potentially hike again. I don't think that's going to happen, only because Canada's willing to sacrifice their dollar, their currency, and they're willing to sacrifice everything internationally to protect their housing market and protect their citizens. And they've shown that today, through the question and answer. It's pretty clear that TIF is willing to continue cutting, even if the US doesn't. And there's a discretion, I guess, that he thinks is fair, where they can deviate from what the Federal Reserve is doing. And so Bank of Canada, I think, is going to continue cutting. And I'm very bullish for that. And I'm bullish for Canadian real estate going into next year because of that fact. Again, the laggard time between bottom of real estate and rates coming down, typically get the bottom of real estate at the max delinquencies. So we should see that towards the end of this year. And that should be so I think this December will be the bottom. Well, we're going to test the bottom from last December. I think we might break it. There's a chance. The economy is really struggling. But then inflation has been so crazy that we may not. Like in real terms, we'll definitely break it. So if you adjust real estate prices for inflation, so you look at real prices as opposed to, like a nominal price of real estate, real prices of real estate, inflation adjusted, have just been destroyed. If you adjust back to 2022 January, when real estate was like way up before it crashed in Toronto and London and other places, and you adjust for the inflation, we've had like 15-20% inflation since then. So prices fell 25%, but then we have inflation for 25% more. So real estate really had like a 40% real, in terms of real buying power, correction, which is significant. We haven't had something like that in Canada in 3 decades. The last time we had a market this bad in real estate was in the early to mid 90s. And for that time, is different than this time, I think, in several different distinct ways. But, the market was flat for 9 years. And then if you bought a house in Toronto in the early 90s, by 2001, if you held it for a decade, it was worth the same amount. After inflation, your property was worth less than what you had bought it for, inflation adjusted. So we've gone through periods in Canada for a whole decade where we had no appreciation. Imagine that now. Imagine you buy a house and 10 years from now it's worth the same as what you bought it for 10 years ago. But you have 10 years of depreciation, 10 years of tenants just like kicking the shit out of your property. That's the reality. So that's why we buy for cash flow. That's why we try to buy properties that are cash flow positive, because we want to have reserves for tenants kicking the shit out of our properties to be able to fix them again, right? You don't have razor thin margins, and you don't want to rely on appreciation when you're buying property. It's a nice, happy benefit, but we want to be relying on cash flow. Even I've strayed from that rule on a few flips I've done recently, and I regretted it. All right. Grinder says, how many couple as well? When is the US going to cut, you think? Our Canadian currency is going to go to shit. True. Yeah, I mean, the second the TIF announced the 0.25% or 25 basis point hike that we got today, or cut that we got today in Canada, our currency lost 0.5% of value immediately to the US dollar. So if we cut again, that's another 1% right there. I think the trend is not going to be in our favor in Canada for the currency. I think that it was $1.32 at the start of this year. And I kind of made a post on Instagram a bit ago, and I was like, I think Canada's in a really rough position, and we're probably going to have to cut before the US. And I didn't know when. I've been calling before Labor Day. If you listen to my streams, I was calling for a cut in Canada before Labor Day. So I thought sometime in like July was my forecast. We got it a little early. I'm very happy for that. I thought we might get 50 basis point. I thought the first one might be a 50, and we get it in July. But again, I have no idea. None of us have any idea. We're all guessing. Again, they're going very slow with it. Usually, once they start hiking, they continue to cutting, they continue to cut. So it's very rare that they would start hiking again, but it could happen too. And so in terms of the dollar, again, I think that $1.40, $1.42, $1.43 Canadian to US is possible, which is minus 10% in the value of our dollar from earlier this year in January, February, when it was $1.32. It was like the best exchange that I saw for 2024. So I think between highs and lows of this year, we'll probably see a 10% variance in the value of the dollar. Now, I think that Canada has a lot of really good things going for it. I'm really bullish on Canada. We've taken a ton of immigrants. We took in like 1.2 million immigrants in like a year. We've taken in like 5 million immigrants in the last little while since Trudeau's been in. So like 20% of our population is all fresh immigrants. That's a good thing in a lot of ways. Culturally, there's some challenges, for real. We need to be very selective who we take in, and we have to be careful. But we want to take in people who have skills and who have wealth, and we don't really want to take in people who are going to be a net drain on our society. We want people who are going to be a net positive for society. So immigration is actually a good thing for GDP. It's a good thing for the economy as it grows. It makes the dollar more desirable as our population grows and we get bigger. As Canada's on trend to have 100 million population, right? In the next, 20, 30 years, I think it's really possible at our current growth rate that, in my lifetime, we will see Canada with 100 million population, which is significant enough that we're, in terms of land mass, I think we're the largest of quality land. Russia's bigger than us, but in terms of like quality, like they have like Siberia, which is like not really quality land. But in terms of quality, like farmable, natural resources, fresh water, Canada's #1 in the world. We have some of the nicest land mass in the world, and we're sparsely populated. So we have lots of room to be a 250 million population country with ease. And global warming and the current trend towards like this warming, it's actually really good. It makes Canada a tropical oasis. It makes our Great Lakes area in Ontario, makes it warm and nice. We barely had snow this winter. in my area of Ontario, southwestern Ontario, I think we had like 5 times I had to shovel the driveway. 5 times the whole year. That's great. So in a lot of ways, Canada's getting better with this global warming shit. And let's be honest, like if global warming is truth, I haven't dived into it. I've heard things on both sides, but maybe we're just in a planetary cycle change. But I mean, the narrative is really actually good for Canada and bullish for Canada. So I'm pro Canadian real estate. We, we don't have a lot of ocean exposure either. We have a lot of really great land, a lot of high land too, if water levels rise. Canada's a great place. Overall, love Canada. Short term, extremely bearish on Canada. We have shit management, some of the worst political management. The Liberals are just a bunch of bozos. None of them are qualified. Majority of them are not qualified, and they're making terrible decisions. So I hope that we have a political change in terms of government. That could really do a lot for this country. We have management that's focused on not investing in the growth of Canada's economy. They're focused on the now. They're focused on political issues now, and I get that biased popular vote, and they do really well with like people who are focused in the now. But I don't know, just a lot of decisions I don't agree with. In terms of like ethical issues, I could care less. Like things that they're focused on, like gay rights or something. Like I'm cool with that. Like I wish the conservatives would be like, yeah, we'll just give you all the gay rights, like whatever you want. Like you want, all that kind of stuff. That's fine. But we're gonna focus on the economy. That would be cool. I wish you could merge like liberal values with conservative economics. Like that would just be perfect for me. I'd be great. I'd be voting for that party. Pretty moderate that way because I'm not extremely conservative in my views. I don't care, honestly. Like I don't care about polygamy. I don't care about gay rights. I don't not that I don't care. Everyone should be able to do what you want with your life as long as it doesn't infringe on someone else. Like chop your dick off. Doesn't even matter. Like as long as you're over 18, do whatever you want with your life. Like I don't know. To me, this stuff doesn't legalize weed. Like that didn't bother me. None of that stuff. Legalize all drugs. Who cares? Let people make their own decisions. Obviously give them guidance and give them, the education so they can see that what they're doing is killing themselves in terms of like doing drugs or whatever. But like freedom. I'm all about freedom. So anyway, it doesn't matter what I think because I'm the minority. And there's no point. The minority has no, it's called tyranny of the majority. So the majority get whatever they want and the minority have to just eat shit. Why do delinquencies and defaults happen after rate cuts? Well, I think it's not necessarily due to the rate cuts per se. It's just historically speaking, it takes a long time. If you look at the data, it takes a long time for someone to go from like not paying their mortgage to eventual foreclosure and delinquency. And so that process can take, and even the foreclosure process itself is like a 10-month process in court. So it takes a long time for the bank to take a property for a person who's got a private mortgage to, lose their property. Or even just a bank mortgage to lose their property. That process takes a long time. At first, what happens is people borrow their lines of credits, they borrow from family and friends, they find a way to keep making the payments, not lose their house. By the time rate cuts come, the economy's fucked. Like the only reason they can lower rates is because raising rates destroyed the economy to bring inflation down. And the result is a destroyed economy where people are suffering. And so the end result is that if you map every time they've ever cut rates in the past, it was because the economy is suffering. And it is true now too, where the economy is suffering. And so the reason for the delinquencies is in part because it takes a long time. And so people were already going, like whether the rates go down or not, there's a whole subsection of people right now that are going into foreclosure who are many months behind, who will never be able to catch up, who are going to go bankrupt, or not bankrupt, but like go through foreclosure at least and lose that house or that rental property or that building. They're going to lose that property. And that was going to happen whether rates went down or not. And so I think the thing that people are not thinking about is that like the best time to buy is when all that inventory comes onto the market. And it's been trickling onto the market and our inventory levels are actually rising. Like I think compared to 2022, we have a 400% increase in supply. So there's 4 times as many houses for sale right now available to buy than there are buyers to buy them. And that number will probably go to 5 to 1. So at that point, it becomes very much a buyer's market. We're in a buyer's market right now. And then as rates fall, you're in a perfect storm where now you can start getting great rates where you can buy a property, fix it up. By the time it's fixed up, rates will have fallen. You're confident enough that rates will be in a good place where you can be in a positive cash flow situation. And so it's a really perfect storm for real estate investors. We're going into one of the golden eras. A golden era, I call a golden era anytime where you have declining interest rates, huge amount of supply, so you can negotiate because there's only a few buyers and tons of sellers, that's the best thing that can possibly happen as a real estate investor, right? We're going into that right now. And I've been waiting for this moment for like, since 2021. I was like, I can't wait for this. In 2022, it finally popped. The bubble kind of cooled off. And housing, I've never seen housing as terrible as it is in Southwestern Ontario right now. So, I'm excited. This is going to be a chance for me to make, if I wanted to really push it, I could probably make $10, $20 million in this next bull run cycle. And so I'm really excited for that. As rates fall, deals start making sense that didn't make sense. If you can, as rates fall, even if rates go back up again, I can lock in, right? So I can ride this weather, I can weather this storm, Why do you not pick up stocks for the power needed for AI? I don't think people are really thinking about that to the same extent. You're right. I think that a lot of the folks in the AI space like renewable energies, which is solar isn't that much better for the environment. Like even EV cars, the amount of poison that goes into those batteries that are useless in 5 to 7 years it's actually better for the environment. And I've heard the argument, if we didn't have electric cars and we just were more efficient with our gas usage cars. So like, I don't even know if all those like toxic, heavy metals that are in those batteries, that where you then recycle those, like how do you even, someone says rate cuts are bearish. It means things are no bueno. Exactly. Michael hit the head on the nail. Good name. It is. That's why, is because when they do finally cut, and the US isn't there yet, their economy is still so robust and strong. But as their economy gets worse, then they can cut rates too. They can't cut until we're in a recession by several metrics, and Canada's there. We're suffering. And so I think in that way, that's why. It's because we're actually not really, Canadians are not doing well. And so the lowering of rates is to stimulate things and to help save Canadians. So bring on the stimulus, baby. Okay, short Canadian, buy Bitcoin. Yeah, I mean, Bitcoin's near all-time high though, right? So how much higher will it go? I don't know. I think 10 years from now, I still think $1 million a token is possible. Like the next decade, 2034, I think we see $1 million a token for Bitcoin. But I don't know, like we also could see Bitcoin at $10,000 a token. So I have a hard time sleeping at night knowing it could be 10,000 USD a token at any given time. And so, yeah, that's why I'll never put all my net worth in something like, one play. I have a hard time going all in on something unless I have full conviction and control over the situation. Like in real estate, I can control the situation. Like I have a lot more control than I do of like the price of Bitcoin or whether management's going to perform an Nvidia or going to perform an X or Y company, right? Like you have no control as an investor. And so it's important to diversify and spread your eggs around in many different baskets and don't go all in. Yeah. Any thoughts on buying real estate in St. John's? Again, I have no idea about St. John's. My understanding is that the cap rates there are decent, but again, like it's St. John's. So the narrative of like how much will rent increase over time compared to a major metropolitan city, I don't know. Probably not as well. Will price appreciation be as high? Probably not. Do you want to be going to St. John's to check on your properties? That's another thing. If you live there, then yeah. Like I think you should probably be investing where you live if the numbers work. In some major metropolitans, they don't work, but I'm sure that in St. John's that there's probably 12 cap properties that exist there. So I'm sure the math works. There you go. Someone following me says they're currently getting their realtor license in St. John. Would love to chat. There you go. You guys can connect. You can chat about rental property opportunities. I'm sure that if you dug hard, you would find triplexes that are like 300 grand. 100 grand a unit, I'm sure you can get 1,000 a month in rent. There's 1% rule. So probably going to be okay buying properties like that. Bum, bum. Going away from appreciation markets and moving towards cash flow real estate. Yeah, I mean, that's a good comment. I just highlight that one. I think that's one that I've always kind of focused on, is like cash flow is king, and you really can't control for appreciation. So I think it makes sense to build a business around it, and a business has to be cash flow positive. It's weird that like there are people who buy real estate businesses that have negative cash flow, and it's not like investing in companies that don't have positive cash flow. It's never made sense to me, but people have made money doing it, so you teach their own. I think you should buy a business that, regardless of what the price of the action does on the property, you can hold it for a long period of time and be okay. That's true. A lot of the immigrants coming in are on visas, and there's no guarantee they could get PR. True that. MMA Keyboard Warrior says, read Unsettled by Stephen Koonin on global warming. Never heard of that book, so there you go. And it says, any thoughts on Austin, Texas market has really cooled down there? Question mark. I don't know. I know in the US, they haven't seen the cool downs in the same way. Florida has recently seen a pretty big pullback. I think that's driven largely because the number one foreign investor, at least in West Palm Beach and in the areas I was looking, is Canadians. So we were the number one foreign investor, and the Canadian money is kind of drying up a little bit. So I'm sure that has its effects. Okay. What are your thoughts on self-managed covered call strategy on something like QQQ or similar with no leverage for cash flow? Yeah, I think you can totally do all right. I applied a lot of leverage to my options account. And so I sold naked calls and I applied leverage to them. And like as an example, I put a $50,000 naked short on Carvana at $39.80 a share. Trash company, should be like 20 bucks a share. Like, oh, it's gonna go down 50%. I'll hold it as long as I have to, was my thought. And then it went from $39 a share to $128 a share. And it fucking tripled. And I didn't stop out. I just left it. I'm like, it'll come back down. I'm still holding it to this day. It's come down now to about 102 bucks. So it's come down 25% from its high that it hit. But that 50,000 went 10x against me and became a $500,000 loss. So that one position, like the lesson there is don't use leverage. Don't short. Even if a company's garbage, you can't short in it. If a company has solid fundamentals, you can invest in it, and the market might take forever to realize. It might take forever to price it properly because markets don't price efficiently. Markets aren't efficient in general. Every value investor believes that markets are inefficient, and it's true, they are. They're mostly hype and market sentiment and bots. But bots just exaggerate all of the movements, so things are more exaggerated than they need to be. But yeah, so to answer your question, covered call strategy is great. I started off options trading just wheeling the index. So you'd sell puts till you get assigned. You'd have the shares in companies that you like. You'd sell covered calls. You sell calls in them that are then covered until your shares get called away. If they don't get called away, it's like a free cash flow dividend strategy to produce cash flow from shares you don't mind holding. And if they get called away, that's okay too because you get called away at a profit because you only sell covered calls at a profit. Yes, that idea works. It's been back tested though, the wheel strategy. A friend of mine sent me some good data on this. And it actually, like if you grow a big enough account, it actually loses to just holding the index. So all this bullshit everyone's talking about, like selling options, for the most part, like it can help you with your entry. If you're going to enter on this day, no matter what, and you're like, look, I'll enter tomorrow at a 2% discount by selling an option, that can make sense. But by and large, what ends up happening is people lose the big rips on the index by selling covered calls. So the market will do 10% up and you'll only get a 2% up because your shares are called away. And then when it's down, you'll miss out on getting a sign, and basically what happens is you miss the gains. Look at the data. Basically what happens is like in months where like you get an index up 10%, the wheeling people, the people who run the options wheel, they're up a lot less, like 5% for that month. And so they lose to the index over a long period of time, especially net of like the trading fees and the other time to manage that versus just holding the index and not looking at it. The same is true. Everyone's like, man, index only goes up, Mike. Why don't you just 2-to-1 leverage the index? And it's like, well, because we get a black swan event and the market goes down 40%, your account's wiped out and you can never come back. And so I learned that firsthand. The worst part of all this is that like I was a financial advisor and I did videos and I taught people not to use leverage, to trust buying the index, don't buy individual stocks. And then here I am like degenerately doing that with my options account. And so I think for me, it started out as being like a game. Like I was just like looking for that excitement and that rush of like, I have days where I make 100 grand and like the fun, exciting trading. Even when I'm down, like it's fun to share with my friends that are traders and just share that experience. Like, oh, I'm down 50 grand today and we're talking about it and like the excitement of it became almost like a game, like a video game for me. And that's where it became a problem is like, you can't treat it as a video game and you can't be needing to log in every day. You need to be saying it and forgetting it. And I think for me, the biggest thing was I started thinking of it like at one point I had $1 million left in my account. I was like, this is a hedge against all of my other activities that are bullish on the market going up. And if shit goes down, I'm just going to be like a super short account. And if the market does eventually tank, it'll suck for all my other investments, but this one account will be up like 10x. And so that's what I was kind of using it as like a hedge. And what ended up happening is the market didn't go to shit because the market never goes to shit. The world just keeps going on. They kick the can down the road. They print more money. Like nothing ever ends. The world just keeps dancing. And I got blown up. in my account. It may come back. I haven't ended the account yet, but yeah, it sucks. It really does. You know, I know better is the worst part. And the learning lessons that I had here were lessons I already knew, just I think needed to be reminded of the importance of not using too much leverage, the importance of not shorting. Again, lessons I already knew. So sucks to learn them again. Yeah. If CAD and USD exchange surge 140, would it be wise to convert all my USD to CAD to capture and benefit from that? You know, if management in Canada changes and we get a conservative government that's focused on the long-term viability of the Canadian economy, and they're actively investing in the Canadian economy, I think the Canadian dollar at some point might be more valuable than the US dollar. I've held this opinion for a while. A long time. It might take a long time. But again, Canada has so much going for it in terms of natural resources that it's just a beautiful, beautiful country and a beautiful culture, which is, having its challenges right now. And we're going through a lot as a country. But Canada has so much potential that I do really think that, I'm still going to be bullish Canada long term. Short term, I'm actually bearish. I would short Canada in the short term. I would short the Canadian dollar right now. But long term, yeah, I'm bullish on Canada. Deep fucking value on Canada. Randy says, assuming I have no US based investments, just have a US contract where I get paid in USD. Again, it's hard to speculate on the right way to do it, but if it was $1.40 something USD for every Canadian, I think you wouldn't be, I think not a terrible idea to take some USD and park it in Canada. I think we will see $1.20 again. So you could get 20% appreciation on that dollar relative to the US. But in the short term, no. In the short term, I think you might lose on that trade. You're shorting CAD given your prediction? No, I'm not. I'm not shorting CAD right now. I do have majority of my portfolio in USD. And so in that way, I am hedged against the Canadian dollar. So I guess in some ways, I have, 7 figures exposure in USD right now. And so in that way, I would benefit from USD being stronger when I convert back to Canadian. And hopefully I'll be able to convert back to Canadian when it's at a favorable point. I'm hoping that, the US NASDAQ pulls back a bit and I can close out my short positions and close out some of my other positions that I have and be in a win position. Do you plan on getting US citizenship? No, I don't want a US passport. I don't want to be a US citizen. They tax you globally wherever you go. I will, don't say never, but I have no interest at all right now. I will do business in the US. I will come visit the US a couple of months a year and help run businesses there and invest in companies in the US. But their tax scheme is going towards socialist. They tax people globally. They're a lot like Canada in a lot of ways, which I like, and different in some ways. Nah. For me, if I'm going to leave, Canada is my home. I love Canada. I'm going to stay in Canada for the foreseeable future. I don't want to leave. And even though I could save a lot in tax by going the Bahamas or Costa Rica or somewhere and live a better life too, lifestyle's better in some ways, I just don't want to. I like living in Canada right now. I like the culture. I like having my family here. I'm raising my 3 kids here too. It's just for me, I'll pay extra tax just to stay for now. But I will retire out of Canada, I think, very likely. And my retirement's probably in terms of retiring, I'll never actually retire. I'll still do something at all the time in my life. I can't do nothing. But when my kids are gone on their own, and we're on our own, my wife and I probably will just change our residence somewhere else. How much leverage do you generally use on real estate? So with real estate, it depends. Typically, you're putting 20 and 25% down. So you're 3-to-1 levered on real estate. That's the normal. 3-to-1, 4-to-1 is pretty normal for leverage in real estate. But the thing that's different in real estate is that the debt is not callable. So, you've got, that's not entirely true, but it never gets called in Canada. I've never seen an instance where the debt is called as long as you make your payments. So if you buy property, like I do, that's cash flow positive, meaning, I just realized Roy and Kitty and I have the exact same chair. How crazy is that? Wow, we have the same chair. I'm like the anti. Whatever I do, the market does the opposite. I'm How funny is that? A few of my buddies are actually tracking every trade I make. And he's like, dude, literally you'll be able to go into positions. If I tell you like to go short, the market will just rally against you. Like you actually have the power to move markets. And it's actually true. Like it's fucking unlucky, but I have that kind of luck. But you know what I do have is like the tenacity and, perseverance and grit that I just never fucking give up. It doesn't matter what kind of bad luck I have. I just keep going. And you know who wins? The guy who never gives up. I never give up. I just keep going. And so I'll always win in the end. It's fine. The secret is just never go all in on one thing. You can never get destroyed. If you have enough baskets, enough little eggs, and enough little hiding spots, you never run out of eggs. They're forever growing. More and more chickens. But yes, to go back to your question about leverage in real estate. In the stock world, you get liquidated. And also like it's hard to determine values, right? So like, is a property underwater? Is it not underwater? Is it undervalued? It's hard to determine that. So the bank can't say, oh, our loan is worth more than the property, because you'll hire 3 appraisers and all 3 appraisers will come back with different values. That's how subjective real estate valuing is, right? There's so much art to it than there is science and math. There is math and science to it, but again, there's so much variability in how people derive value in the 3 fundamental approaches, which is crazy, right? Like some people are saying the building's a 6 cap, some are saying an 8 cap, a 7.2 cap, et cetera, so forth. So yeah. The short answer is stock debt is callable. So as an example today, I put on a huge short and I got called away on the option was liquidated because I, put on a ton of leverage. That can't happen in real estate. You put on a ton of leverage, and as long as you can make the debt obligations, they never call your debt. And so you can wait until it's a favorable time to sell as long as you need to. And the property is producing positive cash flow, you're good. Now, if you buy stocks that don't produce cash flow, like right now you borrow against stocks, it's like 6% interest. If your company's producing a 2% dividend, I'm like, I don't know, Microsoft or something, McDonald's, I don't even know what the dividend rates are for those companies, but you got a huge negative spread there. So every month you're putting money up to cover those. But not only that, they mark to market every 10 minutes, every second now, most brokerages, every second, they're mark to marketing what your shares are worth. And if your shares fall below a certain level, they just liquidate the shares because they're instantly liquid. They can just liquidate your shares and they pay back the debt as much as they need. So that's the problem with the stock market and leverage. You don't get that at all in real estate. It takes half a year to sell a property. And if it's a non-liquid property, like in real estate, a lot of the buildings take 6 months to a year to sell. And so even if the bank wanted their money back, by the time they actually sell it, it's like a year has gone by. And so you have a lot of time to catch up that mortgage payment, even if you're falling behind on it. So it's just a different world. Yeah. Just getting started and buying first investment property in Canada. What's your 3 top tips? Buy for cash flow. Buy for value. Again, it's hard to give recommendations, like general recommendations, because if you're a doctor and you're super busy and you don't have time to renovate your property, I'm not going to tell you to buy a fixer-upper property. I'm not going to tell you to buy a multifamily property that's got a lot of stress and problems, because you don't want tenants messaging you and bugging you when you're at work, right? Like, just every real estate investment is different for each person. There's got to be a fit there. So I can't tell you that one thing is better than the other, but I will say this, like, go look at a lot of properties, become familiar, work with an expert, understand the value of that building comparatively to other buildings, and make sure you're getting it at a discount. And if you wait long enough and you negotiate hard enough, you will always get a deal on a property. So look for a deal on the property. In real estate, you make your money on the buy. In the stock world, you can only ever buy at market value. But in real estate, you can buy it below market value. Imagine if I could go and tell you, hey, like, I would love this. If the stock world was like real estate, I'd be able to go negotiate with someone, be like, hey, I'll buy your shares of Meta, like $300 a share. And someone's like, okay, I'll sell you at $300 a share. I'm going through a hard time, like whatever. I just want cash. I don't know where I can sell them. But there's no liquidity and there's nowhere to sell something. It's hard to sell a property. So because of that lack of liquidity, you can make a lot of arbitrage, a lot of money, and you can arbitrage that price. And so that's why I like real estate and businesses. You can't do that because in the stock world. So for me, stocks make no sense. I shouldn't even be trading them. I have no alpha. I have no edge. And all of you watching this, all of you have no alpha in the stock world. So don't pick stocks. You have no edge. You can be lucky, but you have no alpha. You have no edge above the PhD trading firm with Bloomberg terminals and a team of people behind them. And they barely have an edge. And they're working at it 100 hours a week. I guarantee you, you're not as smart as them. You don't work as hard as them. and they barely have an edge. Like 99% of the hedge funds and the mutual funds, net of fees, don't beat the indexes. So if they can't do it, and they're the smartest and the best, you can't do it. And if you are doing it at 100 hours a week, I feel sorry for you because it's a shit role, shit job, shit roller coaster. I don't know what to call it, but like it's a shit life being a trader. I thought I wanted it, like as a kid, I'd watch shows and be like, oh, I want to be that like crazy trader on Wall Street. And then I tried like the last year. I don't need that in my life. I'm going to stick to real estate and stay retired, semi-retired. I'm good. I don't need that stress in my life. I don't need that volatility. So I came, I went, I saw, I lost. I'm good. I'm going to go back to my businesses. Thankful that I only lost a couple of $1 million stock trading, which like totally sucks. The tangent benefit being that I can now stay in Canada tax-free using those tax losses. So I'm not going to stay in Canada and enjoy Canada, which is what I wanted all along. My wife's like, maybe you secretly just wanted to stay in Canada this whole time. You sabotage yourself so you didn't have to leave the Bahamas. I'm like, do you think I'm not fucked up? Like, I had a fucked up childhood. So like, when you go through the abuse that I went through as a kid, you're mentally unwell. And most of the ultra successful people that I know have been through that type of fucked up situation that creates the driver in them. And maybe in some repressed fucking back corner of my brain, I took on these degenerate 10-to-1 plays because I didn't want to leave Canada. And now I have no reason to go because I have stock losses to use up before I go. That's fucked up. I don't know. Anyway, guys, with that, I'm going to leave you with a catchphrase that I say every time, which is spend less, earn more, and maximize the returns of the difference. That's it. That's the secret equation to building wealth. And, don't make degenerate plays. That's obviously a given. Don't try to invest in the stock market. If you're going to, buy the index, buy things you can walk away for 6 months to a year and not look at it, and buy quality fundamentals and buy no more than 1% in any given company. No more than 1% of your portfolio in any one given company. Spread it across sectors, countries, industries, a diverse, wide portfolio that if a bomb dropped in the US, your stock portfolio is okay. The S&P 500 would not be okay, but the world index would be okay. Right? A new world power would rise up. If you have some exposure to Chinese and other stocks, you'd be fine, right? That's what I'm saying. That's the kind of portfolio where you'll just ride the market and you'll win over time. So do that. Definitely do that. I have some duplexes and triplexes in Sarnia. Someone just asked about duplexes and triplexes. 4 to 6plex, I don't have any 4 to 6plexes in Sarnia currently. We have a 24 unit in Sarnia. We have a couple of duplexes and triplexes and stuff. So yeah. All right, guys, if you guys have any deals, by the way, I am in buying season now. Buying mode is beginning. Hook up any deals. Anyone want to hunt in Sarnia, hit me up. Anyone in Sarnia area, you want to go knock doors, you want to throw out flyers, you want to lock stuff up, I'm happy to work with you to buy every lead that makes sense, get you paid, get me properties, build inventory. Same in London. Hit me up. Definitely interested. Sarnia, London. Those are my farm areas. Or if you want to do something in Florida, we can always chat about that. But definitely Sarnia in London. So hit me up. You guys know where to find me. I'm like Rosehart on social medias, and you guys know my email and everything else. So thanks, guys. We'll see you next week. Oh, my battery's going to die. We'll see you next week.